Has it caught you by surprise yet, ladies and gentlemen? We are back. Yep. This is what happens when your barber tells you he bought XRP. I'll tell you the story. I went in for a haircut. I said to the guy, yo, man, how you doing? You all right? Yeah, cool, all that madness. Sits me down. He's like, I've been watching crypto, bro. I was like, okay, yeah, cool. You know, what you interested in? I was like, XRP's doing big things. My blood was boiling. He started running his mouth. Started saying that banks are going to start using XRP, cross-border payments. Have you heard about the SEC, that they're dropping the case? And all of that madness that came with it. So I said to myself, you know what? He's a retail dude. Leave him. Leave him. He kept going on and on. In the end, ladies and gentlemen, I got up out of the chair, smacked him across the face. I said, don't tell me you're buying XRP because it's the biggest waste of time. Took the clippers out of my frustration and then said, you know what? F it. Let's just get this thing off. So, I am now the new Gary Gensler. Say what you want to say. Don't even say Tino Tate. Nah. How many of you are actually skinhead bold? You know, Mike doesn't know about this. This is a surprise. You know? That's it now. So, here we are. If you like it, hit the like on the live. And for every like that I get, I'm going to slap the old hair. I don't believe I've done it. I'll be honest with you. Just straight clipperoos, off we go. Went to a barber and I was like, look, man, just get rid of it. The XRP story is true, by the way. I did slap him across the face, but never mind. No, it's not true at all. It's just something to open the live. Welcome back, ladies and gentlemen. You better use that bold heading. Why do I read the worst comments, man? I'm not going to use the bold head in bed, bro. Like, please. Anyways, we've had an eventful turn, haven't we, ladies and gentlemen? Yes. Cryptocurrency has been making some significant moves. Bitcoin's gone to bed. XRP's gone to bed. Solana and Ethereum have done some significant things as well. Now, a lot of speculation is that cryptocurrency is mass manipulated because people in crypto expected that that's it now. It's just going to keep on going up. Wrong. It's not going to keep on going up. It needs to go down for it to go back up. And when we understand that, we can then make some money from it. So, what's the big thing that's happening? Ladies and gentlemen, last week, Friday, Jackson Hole Symposium, Mr. Jerome Powell said, yeah, we should be going in line for some rate cuts. Problem is, they've changed the goalpost. Right now, it's no longer about inflation. Why? Because inflation is sticky. The horizon with regards to tariffs is going to probably be a problem for inflation in the future. But their main concern right now is, of course, the unemployment market. That seems to be showing some fluctuations. There could be a trend that says that the unemployment rate is going to start coming up, which will grant the idea of a rate cut. But the Fed simply cutting or changing its tone, even though it came across as dovish, kind of puts investors on a bit of the back foot, thinking, hold on a second, you're changing the way you're doing things now? That undermines the purpose of the Fed. In today's live stream, I'm going to break it all down for you. Happy bank holiday to everyone. Yes, what? Stop laughing. Stop laughing. This new look is not good. Come on. Listen, rate cuts or Tino cuts? Did you sell the head to buy? Well, hold on. Did you sell the head to buy more ETH? Nah, man, we've been short in ETH and Bitcoin and Ethereum from this wild high. I'm going to break that down for you and explain to you everything you need to know about what's going to be happening this week, ladies and gentlemen. But listen, I'm glad I'm back. Your head looks like your ass. That is so dead. That is so dead. Like, why am I reading these comments? Feels something is incomplete. Listen, the light's reflecting. I get it. It's not reflecting too hard. I'll kill the lights in a minute. Don't worry. I just have to come on live, get this done and dusted, come out with my hair, no hair. You're here for information. Forget how I look. Let's get with the program, ladies and gentlemen. It's been a while. Okay, so listen. I've been in several shorts over the weekend, and I saw this stop run. Ethereum I'm getting a little bit concerned about because it's starting to do some sharp reversals back up. Now, the problem that I've got is this morning, I was in profit of around $40,000, and that was split between Bitcoin, Ethereum, and Solana. Now, we've done pretty well with our trades so far, But the sharp reversal back up has kind of got me a little bit concerned because it is relatively close to my entry. I am using a decent amount of leverage relative to the account size, but overall, I'm ready to close off these trades because we managed to capture the retrace back into the vector candle recovery point, okay? Now, you can see here that Bitcoin and Ethereum, they made this, Ethereum and Solana made a nice sweep to the upside today, over the weekend, psychological levels, stop run up to then make the sharp drop back down again. And everyone in cryptocurrency is like, why is everything dropped? What's going on? Well, they're all putting it down to the idea that whales are selling. Okay, so let's just go and back the logic. Are whales selling or is it simply the miners? Well, looking at this, hold on a second. Why has it done this? Why are you doing this to me? Let me just change this up. Here we go. So the miners position index isn't really giving me anything to be concerned about. Okay, miners aren't really selling too much. And just wait for this to come up into play for a second. Whilst that's doing that, I'll just go over. Here we go. So look, the miners aren't really selling, as you can see. On the right, the miners aren't really forced to get rid of Bitcoin right now, maybe because they're anticipating that there could be some further downside movement and they want to start selling as prices go up. But there's something that's hit the marketplace, which could be a bit of a problem. China's starting to pull some very interesting flavor with regards to rare earth metals. This is massive. And if any of you are involved in defense-based stocks, you'll know that the F-52, where is it? The F-52 jet, where are we? Here we go. There you go. The F-35 fighter plane is dependent on several rare earth metals. This is the only way that China can really stick it to Donald Trump when it comes to the tariffs regarding China and the USA, okay? That's why there's nothing set in stone when it comes to the tariffs between US and China, because the US relies so heavily on China. Trump is effectively saying to them, all right, we're going to put a tariff. He's trying to probe the beast, and the beast is going to start coming out with some flavor. And if they then do exactly what they did before, which was put a cap on the exports of rare earth metals, ladies and gentlemen, it's going to be a wild, shocking show. It really will. That will cause a bit of a problem for the tech market. Speaking of which, we have a very, very, very important announcement coming out this week. Nvidia news announcements, their earnings call. Now, you know what's going on with Nvidia. We just recently saw that Nvidia has got into bed with the US government and is giving 15% of the revenue over the next 3 years as such. Now, if they didn't do that, it would be costing them around $50 billion over those 3 years. But now they're giving this rev share, which is only going to cost them around 3.8. Trump is a businessman, but China doesn't like that. Plus, Luttvik's comments regarding China has kind of cheesed off China, and now China's not allowing corporate companies in China to buy the H20 chip that Nvidia provides. Now, the bad thing is we're going to wait and see if that's going to have an impact on Nvidia's earnings. Speaking of which, going over into Nvidia's statistics to put it into perspective, and I'm going to get into Bitcoin, don't worry, because I need to keep an eye on that trade. So going into Nvidia, we can see there's been a little bit of distribution towards the all-time highs, but at the bottom right down here, as you can see, we're starting to see a deceleration in earnings and sales from Nvidia. Even though it's stellar actual earnings, we're starting to see a deceleration, which could be because of what's going on with the tariffs and, more importantly, the rate cuts. Speaking of which, what have you done here, Tino? Here we go. So Friday, Jackson Hole Symposium, everything's been great. Powell has been very dovish, and that means we're going to get rate cuts. However, on the day of the actual rate cut story itself, what's it doing? Here we go. Let's do that again. What's going on with the rate cut story is this. The bets came in at 71.2%. Then it went up during intraday at 91.2%. Then it's now gone to 83.1%. Investors are still not so confident with the idea that the Federal Reserve is comfortable cutting the rates. If there's no real conviction, like over the weekend, everyone's been like, buy. That's fine. But we've got a bit of a problem because this week's data that's coming out is probably going to solidify the idea whether or not the Fed should be cutting the rates. There has been speculation among federal speakers saying that some of us should be cutting the rates. Maybe we shouldn't be cutting the rates. You're cutting rates into stagflation. You're cutting rates when inflation is sticky. You're cutting rates when the labor market could actually grant the idea of a rate cut, but then all of a sudden they're now expecting that this week's unemployment claims reading is going to come in at 231,000. The Fed is not seeing a trend in the data. Look at it. 235 was the last reading. 224 previous. 226, 218, 217. It's not really giving us a trend, but it looks like it's going up in terms of unemployment claims, which is why the Fed has decided to go with what the unemployment claim story is. because if people are losing their jobs because interest rates are high, companies then have to reposition their balance sheet, start winding down on things. But then if you go back to last week's data with the manufacturing data, it came in and showed that everything is absolutely great. 55.5 on the flash PMI and, of course, 53.3 on the flash manufacturing. That tells you what? Expansion. There's no contraction in the US economy, so why would they need to cut the rates? If their goal was to get inflation down, it doesn't look like they're doing too well with that. Why? Because, look, even existing home sales are coming up. So the economy is sustaining itself, which is why investors are sort of like on the back foot about whether they should be getting involved in getting the actual interest rates cuts, which means, are they going to have to position themselves now in various other assets, which leads me over to this story over here. We need to pay attention to this chart because this decides if Bitcoin goes up or down. The last reading on the reverse repurchase agreement, and this, ladies and gentlemen, is Wall Street savings account. The US government comes along and says, what's going on? If you want to save money, you come to us. We give you treasuries, you earn interest, and then we reverse that transaction. So Wall Street's like, you know what, that sounds like a good idea. But why am I going to do that now? US deficit is shooting up. That means investors are going to be seeking higher rates of return to be buying the debt. I'm not going to get involved in your debt because I know the bigger picture says that you have got a deficit that is growing and growing, and the tariffs are going to be a bit of a problem in the future. Your inflation is dog. That only means that I need to demand a higher rate of return for holding your debt. As it stands right now, this is showing that it's at 36.28 billion. That is piss poor, ladies and gentlemen. It's no good. It means that Wall Street's not even favoring low risk investments. Is it because they don't want to get involved in the US government's debt because they don't trust it? Well, it is practically risk-free, but they're demanding higher rates of return because they're projecting the future that it might not look too good. So if this is down, that means cryptocurrency and everything should be going up because investors are seeking higher rates of return or higher risk. If they don't want low risk, they're going over to high risk. But look at where we are right now. So you've got Ethereum. It cleared its all-time high. Mad love and respect, everyone, to anyone who had Ethereum. Congratulations. You clicked that all-time high and you then made a little bit of a reversal. Solana couldn't quite make the all-time high, but it was close enough. But now we've got this pullback that's coming into play. Not too concerned about it. In the bigger picture, yep. I'm running shorts on everything across the board right now, and that's only because it's a short-term play. I do believe that cryptocurrency is going to still come back up, but they need to buy it on discount. Ain't no dude with a brain is going to be buying Ethereum at these high prices of 4,956, nearly $3 billion worth of open interest wiped out. I mean, if we just go and have a look at the liquidations coming into play, you can see, look at this bad boy right here, completely swiped it, clean as a bean like my head. Anyways, so Bitcoin swept that liquidity, shaking out all the retail traders. And the sad truth about it is this, going into the weekend, once the Jackson Hole Symposium came into play, everyone was like, if you don't own assets, you're a donut. Okay, so everyone went to the weekend and started buying everything, woke up Monday morning feeling like, you know, they got all liquidated, ladies and gentlemen. And that's the sad truth. When you get a big move like this, you want proof of that move, ladies and gentlemen. So you want to see the retrace. Going into Bitcoin price action right now, you can see Bitcoin is stalling at these lows right now, currently trading at 111,532. Going into the order flow, you can see we got some bids. 10.62 million at 109,302. Going into it, 15 million at 109,800. Sorry, yeah, same thing again. And we've got 12 million just there. Where was it? There you go. 12 million at 110,500. People are expecting Bitcoin to pull back to around the 110,000 region. But when we look back on the book, you can see we've had some more interesting behavior down here. This looks like it's an order block maybe that is coming into, for an iceberg, should I say, that's planting some liquidity here to buy Bitcoin in many positions, but close by. But you can see that the book is sort of light, and that's only because investors still don't know where they expect everything in reference to the interest rates. Going over into the 10-year bond market, you can see that's currently trading negative from Friday's gains itself. The 2-year yield is up 0.87%, and then, of course, the 5-year and the 10-year, they too are also trading positive. But one thing you've got to take into consideration is investors' expectations of the future. So here is the interest rate right now, 4.5%. Now they're coming in at 4.2% after that drop to the downside, but it's starting to climb up ever so slightly. The volatility index is also representing that with a sharp move lower. Investors have got complacent and they've got themselves into risk. Equally, the guys that have hedged themselves here are now probably going to be in a position to want to re-hedge themselves against it. With that being said, going over into gold, we're talking about hedging. Gold right now is in a bit of a pickle because we got a dovish statement from the Federal Reserve, but at the same time, gold is not behaving like it should be. It's not behaving like it should be, ladies and gentlemen, and that's the sad truth about it. Quickly going over into this chart right here, which will put things into perspective. This is important. In front of you is the S&P 500 FINRA margin balance ratio. We always have to pay attention to this bad boy. Why? Because it's consistent with us understanding if the market is overvalued or not. Historically, if we enlarge this chart, you can see that for every peak that the red line goes to is where the market is deemed as overvalued. Why? Because investors are borrowing a bagload of money on margin and going into risk. Historically, it suggests that every time it hits a peak above the 0.4% region, that's where we would expect that a lot of traders are stuck in margin, and that's when the margin call comes into play. That's when investors say, you know what, let's start taking something off the table. Now, if we get the rate cuts, you've got stock market at all-time highs, S&P all-time highs. The bonds market is in the bin. The yields are all over the spot, trying to work out if we are going to get rate cuts or not. You got tariffs. You got sticky inflation. You got an unemployment market that, quite frankly, is so stubborn it doesn't know what it wants to do. Last week, it was 235,000. Now they're projecting it to be lower. What's going on? Companies are starting to transition themselves in preparation for tariffs. We don't even know where we are with the tariffs for China and the USA. Now you got China coming out with something on regards to rare earth metals. We also heard about China wanting to invade Taiwan back in the day, only not so long ago. Like, what's the story? Quite frankly, ladies and gentlemen, even when you look at also the refinancing of corporate debt that's coming in this fall, 65% of the assets or the finance that has been put out into the marketplace is made up of BBB rated assets. Okay. The rating of that risk is BBB. That's okay. However, if there are economic problems or there's instability in certain marketplaces or economies, that BBB rating does carry a risk. 65% of that liquidity, or should I say those assets, are all from the tech market. If Nvidia flops on its earnings, then what we've got in front of us, ladies and gentlemen, is investors are just going to wet the bed. The NASDAQ will just come back down and completely rip lower, and you'll then start to see what I am expecting from the marketplace, which is in principle a contractionary phase. Look at that. It's been expanding non-stop, ladies and gentlemen. You had the tariff story and then it expanded back up. This is an aggressive move to the upside, which explains why this chart right here shows you how much margin investors have been taking on. So the faster they're borrowing money, the faster they're putting it to work, the sooner they're going to want to pull out if the market starts to turn. Now, if we only get a 25 basis point rate cut, in my opinion, that's not enough to justify a full Fed pivot. We need to see a bigger cut. And if we get data this week that doesn't give us the reason to believe that the market is sustaining itself at these levels, or does it warrant the Federal Reserve to cut the rates, then, ladies and gentlemen, we're going to keep interest rates high. We are going to keep interest rates at those levels. And that's what we've got to be very mindful of. Going over into cryptocurrency right now to put it into perspective. Bitcoin on the 15-minute time frame, on the 15-hour chart, has now managed to break away from this level here at 111,951. It's a very important level, okay? Equally, you've got vector candle recovery points down here at 109, and then we go even further down towards the 101,000. Don't think I ain't fully aware of the CME gap on Bitcoin. So we go over to that, and you can see that there is a gap on Bitcoin that would look to be filled, ladies and gentlemen. There is a gap. However, what you've got to be careful of is this. The gap can appear, but it doesn't mean that the gap needs to be filled now. The gap can actually continue to be open, and then they can fill it at another point. What have they got to do? They've got to buy it up first to sell into that gap because it's a huge imbalance. Me personally, I would want Bitcoin to shoot back up to test this narrative of the retrace. Okay? Going over into the daily time frame to put it into perspective. It's breaking the 50 EMA. The 5 and 13 EMA, which is this red line and this yellow line right here, are starting to cross over into the 50 EMA. If these two moving averages cross over into the blue line, we're going to have ourselves a little bit of a problem, and momentum may start to sustain itself to the downside. Now, today we do have the UK away from the marketplace, so the market might not be here, neither there. It might not be doing too much, okay, because it's a bank holiday in the UK. But just be very careful as we go into the open of the New York session, which is in about 10 minutes' time. Just be mindful that the market is down on certain volumes, so it is prone to volatility. So just make sure you're protecting yourselves, guys, because these liquidations over here where we are, liquidations that are still coming into play down here, it's pretty interesting that they haven't clipped those earlier on today. But quite frankly, it needs to happen. You need Bitcoin to go down, to go back up. Look at that red vector candle. It's going to come back into that. I'm telling you, it will return back into this, okay? But they need to bid Bitcoin to bring it back up again. Are we cool with that? Stop being a prune. Oh, come on, man. No, I'm not having that. I need a Harley. I do need a Harley. I'm going to get a Harley. Very interesting comment there. Tino sold his soul and now is one of them. Where did I sell my soul? What are you talking about? Gap in the VIX too. Yes. Let's just quickly dive into something as well, guys, because I'm getting a lot of questions about it. Circle. Okay. Go into Circle. Now, Circle is down only 0.3% in the pre-markets. And the Nasdaq's not really doing too much either. But Circle, like I said to you, this is a long-term play, guys. And people are adamant about Circle in the sense where they think it's just going to be a flop. I beg to differ. You've got the ECB wanting to now come into stablecoins. And I've told you before that once the stablecoin story starts to flourish, there's going to be merger and acquisitions, and Circle is going to be one of those companies that are going to be the ones that buy up all these companies, with the exception of Ripple, okay? And that'll be a very interesting thing if Circle were to try and buy out Ripple, but Ripple tried to buy out Circle and denied it. So Circle did a good job there. If you're already trying to get an acquisitions trying to come into play in your company when it was valued at 2 billion, now it's valued at 20 billion, you know you're onto something, and it's all about the stable coin business. I think that's where we're moving to with cryptocurrency. People ask me, Tino, are we done with the cycles? Quite frankly, ladies and gentlemen, in terms of the cycles with cryptocurrency, you've got to just accept, are you in it for the money or are you in it for the tech? You've got governments, ETFs, and all of that. It's all Wall Street. It's all centralized behavior. Say goodbye to your decentralization. That is the truth. All right. So if you can make money with Bitcoin, you only get rich by selling it. It's no good in floating profits. Exactly what I've got going off right now. I need to get rid of this position. I do need to get rid of this position. 30K. I can't complain about that. You know what? Shall we sell it? Shall we close off the positions, ladies and gentlemen? Come on, type. I want to run a poll. I want you guys to decide. I'm happy with that. Yes or no? Should we close off these positions? Tino Statham, thank you. Thank you. Tino went from cooking in the trading office to cooking in the van. Tino, are you an X-Man now? I'm not an X-Man, but I'm not a clone. Hey, Tino, how can we tell apart vector candles that get recovered versus those that will never get recovered? I can't seem to find a pattern on this. The key aspect to vector candle recovery is this. The closer it is, and you have to look at things in terms of probability, okay? Look at this for Bitcoin, okay? All right, this is the gap that we're all talking about right now with the CME, okay? But let's just go over to Bitcoin for a second, right? This came out on positive news. It was a fast move. Fast move is the false move. That's what we always say, okay? Now, it was a vector candle that was close by, huge imbalance. That's what granted me to take the short on Bitcoin. So let me just get the short up on Bitcoin for a second. Come on, here we go. So I took the short right here on Bitcoin, as you can see, all the way up there, okay? And that was at an average entry of around 116,409, okay? Why did I take that trade? Because there was a vector candle nearby. The markets had already pumped up at the start of the Friday session with the Jackson Hole Symposium. It did really well. The weekend didn't come through with anything for Bitcoin, okay? So ultimately, I said to myself, right, we've got a vector candle recovery point right here. The probability that it's going to get recovered is really high. So I just took the trade. I have to simplify the vector recovery. Now, if I've got a vector candle all the way down here, right? Down here at 109,476. Do you think I really need to be caring about that? I will start paying attention to that when Bitcoin's at 110,000. So if I can get myself a $500 to $1,000 gain or $1,000 move in Bitcoin, I improve the odds of the trade working in my favor by looking to vectors nearby. I ain't going to focus on a vector candle that's too far away. That's quite far. Looking at Bitcoin's price, it's, 111,000 now and 109. Numerically, it doesn't sound like it's too far away, okay? But when you're looking at Bitcoin in relation to vector recovery, you've got to look at it in terms of order flow and imbalance. Vectors are imbalances. The market moved at speed from that point. Mr. Market Maker started to offer prices high, started to build in shorts from various levels, right? So if I'm in that level and price goes to 110,000 and I know there's a vector at 109, then if I take the trade and Bitcoin goes towards that area, I'm improving the probability it's going to work when I marry up the macros that's going off. Whales are selling, as it says over here. Here we go. We got whales, crypto winners. Where is it? Where is it? Here we go. No. Where is it? Where is it? Where are you? I saw it. I just saw it. Apparently, whales are actually getting rid of their... Here we go. There you go. No paper Bitcoin conspiracies are required. The price has stalled because a number of whales have hit their magic number and are unloading. And this is healthy. And that's correct. It is healthy for them to start unloading because now you've got a bag load of cash and you can now put that cash to work. That's the way it works, ladies and gentlemen, because now you've got more profit. So you can now buy more and hold it for less time. That's what these whales are effectively doing, in my opinion. Tantino, regarding Circle, would you pick up some now or wait till Fed pivot or both thoughts? Right. I will start picking up myself. It's not financial advice. It's common sense. I will start picking up Circle when at the bottom here, you can see where it says 68. That's the number of funds that are actively trading this stock. Three reasons as to why I'll get involved in it. First things first, the prospects of stablecoin, the industry itself. There's already been mergers and acquisitions coming into play with regards to stablecoins where Circle denied Ripple's buyout for Circle. So already in the future, I know that that's something that can happen because it's all about dominance. Okay, who's going to do it more? Because right now it's being distributed across various other stablecoin providers. You got Tether, you got Circle, you got Ripple. They've all got their own stablecoin. So fundamentally, they all want a piece of the market. But whoever's got the bigger amount of cash that can afford to buy out each company then effectively tries to create the monopoly. Okay, that's one reason. The second reason is this. Fund ownership. The more funds that trade this, the more I'm going to get involved in it. And when it hits 100, that's when I'm going to start looking at getting involved in Circle, whatever price it is. I'll start buying Circle when it hits 100 fund owners. And the third reason to back the idea of fund ownership is the market cap. Look at how many shares it trades per day. Big boys are playing 24 million shares nearly 25 million shares per day. That tells me that bigger players can offload and load big positions without disrupting the market, okay? So when I can see those things coming into play, that's where I'm going to be purchasing and taking on some positions in Circle. Now, some of you are probably asking, what about MicroStrategy with Sailor wanting to buy more Bitcoin? He's going to keep on buying Bitcoin. It doesn't matter about that. But just looking at where we are with MicroStrategy, you can see, their earnings per share is absolutely dog. If you buy this company purely from a stock value based perspective, you're not going to be earning no earnings per share. In 2026, the estimated earnings per share is minus 0.32 cents. So you're losing 32 cents for every share that you hold. But why are you holding the share? Simple. They own Bitcoin. And you believe that as Bitcoin's price goes up, so does the value of this stock. Offerings as well. They're going to be making money and going to be giving money away, selling their stock to get more Bitcoin. That's the only reason why you are investing in MicroStrategy, okay? BlackRock invests or holds 5% of MicroStrategy stock, not because it does great fundamentally. No, it's because they hold a fair stack of Bitcoin. Combine that Bitcoin with the ETF, even though BlackRock does not hold the Bitcoin in the ETF. It's a representative. It's there as the middleman because it earns off the fees. It doesn't care if the Bitcoin goes up or down. It still earns off the fees of the ETF. All right. So that's the only reason why you'd be buying MicroStrategy. What we got here? Thoughts and opinions on Casper Coin. I don't really have that much to say about Casper Coin other than from a perspective of price action itself. Let me just quickly have a look at that, because the question is, are we going to go into altcoin season per se? So you can see Casper right now, it's just really trading sideways on the hourly. A lot of altcoins are starting to make some decent moves. Let me just quickly go over to a watch list that I've got, altcoin, the totals chart, just to really put into perspective where we are with altcoins. So you can see a lot of altcoins have taken a stab to the downside, currently trading below the 50 EMA, but losing the $1.06 trillion market cap. Going into the higher time frames of that, this is where you want to pay attention, okay? So remember when I was talking to you about all the altcoins that were trading below the 50 EMA, but they had others that were trading at above the 50 EMA, and when they came into the 50 EMA and test, they would be able to move away from it. That story has happened here with the retrace into it moving upwards, okay? So now what we've got here is altcoins are pulling back towards the 50 EMA across the board. So money is coming out of altcoins and it might start merging over into Bitcoin. Who knows, okay? But as long as altcoin market can sustain itself above the 50 EMA and come down to then make recoveries back up, then the logic for me says the following: whether you focus on altcoins or not, you really want to focus on USDT in terms of the dominance. The same way we look at the dollar dominance for Forex is the same way you've got to look at it for this, okay? In front of you is the USDT chart. Look at where it's come towards and look at where it's stopped, okay? So this is where people started to accumulate Bitcoin, okay? All right? So they started to buy it as it was dropping, right? Then it paused. Bitcoin makes a move to the upside, and then everyone's like, wow, wow, wow. Then they started to transition into USDT. USDT starts to move back up. Then they see Bitcoin on a discount. Then they start to buy it again, sell the USDT to come into Bitcoin. We're now back at that psychological zone right now. When I say psychological, it's a point in the chart where previous players saw or perceived Bitcoin to be of value at this level, okay? So we're now waiting to see if they are engaged at this price point of 4.38% in terms of yield. Can they think that now is a good time to start buying Bitcoin after this big rally to the upside? Because you've got to remember, in Forex, it's all about perceived value. How many euros do I get right now with my dollar? Well, you don't get that much. But how many dollars do I get with the euro? Well, ladies and gentlemen, your tariff. Check that. 15% is the tariff rate for the Eurozone. On top of that, nearly combined between Euro and Japan is $1 trillion investment into the US. They ain't using euros or yen for that, are they? They're converting it all into dollars. So even though the dollar purchasing power is absolutely dog, it does help people make money when the dollar's purchasing power is zilch. Because look what's going on. Dollar down, everything up. But the rates are going to get cut. And when the rates get cut, that means investors better lock in the yields that we're getting now because the rates are going to come down. So what do you think's going to serve Donald Trump? If they don't buy the bonds because the dollar value is so bad, that means they're going to be going elsewhere. That means they're going to go to the European stock market. They're going to go to the Japanese supermarket. They're going to even buy European and Japanese bonds. What about the US? Why aren't they buying the US bonds? Druckenmiller was right about shorting the US bond market, and he's done a bloody good job of that as well. Anything? You feel like this bald head is yelling at you. Please, man, stop it. How's that ETH trade? Let's have a look. Well, right now we're doing okay on the ETH trade. We were at 20. See, this morning we were up 40,000. Now we're up 32. With the current trades. The Bitcoin trade's doing fine right now. Bitcoin looks like it's getting ready to roll over. The market is now open. Okay, so the market is open. Bitcoin's starting to gain a bit of traction. Nasdaq's starting to roll over. Let me just quickly have a look at the Solana trade as well to put it into perspective. Come on. Here we go. Yeah, Solana's doing really well to pull back. I'm glad I didn't close it. Yeah, there's a difference between like 5-6 grand right now. And then here we go, Ethereum. So Ethereum's starting to pull back right now. It's getting quite aggressive because the NASDAQ is also pulling back. There you go. So they like to float price up. That's something you've got to pay attention to, ladies and gentlemen, when you are trading. They'll float price up because just looking at comments across the board, oh, this is the reversal. The bottom is in. Okay, cool. What we want to see is we want to see them try and retest these lows. If they can retest the lows and then move away from it, then happy days. We may have got ourselves the bottom. Some news announcements needs to come in, but we're down a pool of liquidity, so it can equally come down to equally shoot back up again. All right. But this week itself, the data that's coming out this week, we have the new home sales today at 3 p.m. Is that correct? Yeah. Yeah, to have the new home sales today at 3 p.m., which does look like it's been projected for more. So that solidifies the idea of not really having to cut rates. Then you've got core durable goods coming out on Tuesday, but Wednesday is Nvidia's news announcements. That's why there's no news announcements on Wednesday, typical. But preliminary GDP and the unemployment claims are going to be a big one. But the GDP came in at 3% last time and they're expecting it to expand. All right. But the problem is for every dollar that the US earns, it owes 120% on top of it. So is that really a good GDP thing? No, it's not. In my opinion, ladies and gentlemen, it really isn't. Okay. Quickly going over into the NASDAQ. Actually, I need to go over to the yen to understand if we're in safe haven territory. Not really. You can see bright as day that the markets, in terms of Forex, they're having a problem with where they're going to allocate it. I mean, euro has made significant gains to the upside, but investors are waiting to see if they're going to cut the rates on the dollar, then they're going to get those euros and they're just going to rush it up. Okay, they're just going to keep on marking euro higher. Okay, because investors are going to be then going into the bonds market of the US to try and lock in the yields, but the rate of return on the dollar is going to be lower, so they're going to go elsewhere, even though the euro itself is at 2.14% on the interest rates. Fundamentally, as a currency pair, it's holding value against the US dollar. Plus, they don't have tariffs. So that's another story. Damn, what happened to Tino? It's not looking like... Listen, this is what happens when you trade crypto for a week. Anyways, who shorted his hair with a high leverage? Right, listen. Anyways, listen. Mad love and respect, ladies and gentlemen. I hope that does make sense for you all. Hit the like button, subscribe, and if you like the haircut, then let me know. If you don't, then I'll just have to go and get some custom-made... fancy wigs, and you pick a wig and I'll wear it. All right. Mad love.